Everybody, the stock market has pulled back from its recent highs. It's down about 5% as far as the S&P and Dow Jones go from recent highs. Not quite a correction, but it's about halfway there. And it kind of feels like a correction. A lot of stocks are down by 10% or more from their recent highs, which is the definition of a correction. But we're going to talk about some of the lessons from Warren Buffett, one of the top investors of all time, arguably the best investor of all time. Before we dive in, take a minute, click subscribe to my channel, and check out the link you see on your screen. It's a message from my sponsor, The Motley Fool, fool.com/Frankel. You can get the top 10 stocks to buy right now, and it's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So, Warren Buffett has given us some very valuable lessons over a 6-decade investment career, as almost 6 decades at the helm of Berkshire Hathaway. He puts out annual letters each year, gives a lot of TV interviews, things like that. Not as many as he used to, but he has given a lot. So I want to talk about a few of Warren Buffett's top investing lessons for a market environment like this and what they mean. So number one, widespread fear is your friend as an investor because it serves up bargain purchases. In other words, now is not the time to panic. Even if the market falls another 5%, 10%, it's not the time to panic. As a long-term investor, if you're investing in quality businesses, that's a good time to buy. It's not a time to panic. It's not a time to watch your portfolio every day. I know a lot of people who do that way too much, but it's a time to start thinking about, putting some money to work and think about if you like the stock at $100 a month ago and it's trading for $90 now, you should like it even more now if it's a good investment. So keep that in mind. Number two, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. So, one exercise you could do is look at all the companies in your portfolio one at a time and ask yourself, are these good businesses? Did I buy them for the right reasons? If the answer is yes, you have nothing to worry about. Pick good stocks at good times. Again, when the market falls, it's a good buying opportunity, and keep them for as long as they remain good companies. Don't sell them because it went down. Don't sell them because they went up. Just if they're a good company and you don't need the money, hold on to it. Number three, the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. In other words, when you see the commentators on TV panic or you see them all excited, you don't have to do the same thing. Trust your own investment process, trust your own convictions, trust your own investment research. Remember the first two quotes I said. When people are fearful, that's when it's time to buy, that's when it's time to shop. When you see everybody jumping into the market because everyone's making easy money, we saw a lot of that in 2021 specifically. That's the time you should be a little cautious and maybe take some money off the table. So don't go with the crowd. Going with the crowd is a recipe for failure over time. Number four, the best chance to deploy capital is when things are going down. A lot of people, our human nature makes us want to do the opposite of what investors should do. It's common knowledge that the central goal of investing is to buy low and sell high, right? Well, our instincts want us to do the exact opposite. It's our instinct to jump in the market when we see all of our friends making money and stocks could go nowhere but up. That's when it's our instinct to put as much as we can in to not miss out. On the other hand, when stocks are falling, it's our instinct to say, well, maybe I should get out before this gets any worse, especially during real market corrections and crashes and things like that. But that's the complete opposite of what you should be doing. The way you should be thinking about it is, all right, I don't like looking at the number in my portfolio right now. No one likes losing money, but this is the best time to buy. Is when things are on the way down with no end in sight and things like that. And every day it seems to go down. I think the market had a 9-day losing streak just recently, or something to that effect. Those are the times to buy. Long term, those are great times to buy. Now, can the market go down more? Absolutely. But from a historical perspective, when the market is significantly off the highs, is a good time to buy from a long term perspective. So number 5 is a quote from Buffett that he said during the financial crisis in '08 and '09. He said, "It's been an ideal period for investors. A climate of fear is their best friend. Those who only invest when commentators are upbeat end up paying a heavy price for meaningless reassurance." In other words, when everyone seems sad on CNBC, that's the time to invest. When you see a lot of negative headlines in the Wall Street Journal, that's the time to invest. Um, all right, number 6, buy companies with strong histories of profitability and with a dominant business franchise. If you look at the stocks that are in Warren Buffett's portfolio, they generally fit into that sentence. Think of just his biggest investments. Apple, dominant franchise. The iPhone has a big market share in the U.S. So does the iPad. Um, the Mac is a great franchise and a strong history of profitability. Apple makes a lot of money. Looking through, Bank of America is another big one. Pretty dominant business franchise. Number one consumer deposit share in the U.S. And good history of profitability. Obviously not during the financial crisis, but no banks really made money during then. Other than that, great history of profitability, especially in the modern age. Ever since Buffett's owned it anyway. Coca-Cola is another obvious one. American Express is a good one. But Buffett invests in stocks with strong histories of profitability and strong franchises, and that kind of lets you sleep well during tough times. I can't think of any economic crisis that would be bad enough that people would stop buying Coca-Cola's products or stop needing Bank of America's services. So think about that when you're trying to figure out what stocks to buy that will let you sleep soundly during tough times. And last but certainly not least, this is one of my favorite points to make when the market kind of goes down. In the 20th century, the United States endured 2 world wars and other traumatic and expensive military conflicts, the Depression, a dozen or so recessions and financial panics, oil shocks, a flu epidemic, and the resignation of a disgraced president. Yet, the Dow rose from 66 to 11,497 in that time. So, a shorter way to say that is if you're concerned about what's happening in the market right now, one of the best things you can do is zoom out. Instead of looking at the 2-week chart of your portfolio where it's been down by about 5%, look at a 6-month chart of the market where it's been up for a significant amount. Look at a 10-year chart of the market. Keep zooming out, and it'll kind of put the current situation in perspective. And again, the market's really not that bad right now. Down 5% from the highs is hardly anything to worry about. But when we've had such a great run through 2024, it feels like it's a problem. So it helps to put it in perspective. Zoom out, take it one day at a time. Don't panic, and look for buying opportunities as we go. Hopefully you enjoyed this video. What are some of your favorite Warren Buffett quotes? Please leave them in the comments. I'll do my best to respond to them all individually. Thank you so much for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.